A very good morning and welcome to Bloomberg UK, the special focus on the biggest challenges facing the British government, economy, financial services, markets. I'm Manish Cranny in Dubai. The UK private sector firms have suffered their first contraction in 7 months, revealing growing economic toll of higher rates and a squeeze on households. And down came the house of British cards. The pound collapsed by over almost 1% yesterday. And this is getting tougher and tougher. There was a moment of recovery late in the trade, but the bottom line is this, is that you want to stay short the pound, according to Nomura. This is what they've got to say to you. You want to target 122. There's too much puff in terms of the expectations of what the Bank of England will do. So the bottom line is there's too many rate hikes priced in there at the moment. But the real house of cards came at the short end of the curve in the gilt market. The PMI below 50 was a red flag. Mild recession on the way. Down came the yields, and they career lower again this morning, 4.93. You are sub 5% for the first time since August the 11th. And this is about the PMIs. It's time to reconsider how much more the Bank of England can really do when it comes to that. Traders are now betting 28 basis points of hikes next month, down from 5.9% peak in March of next year. And that was up over the 6% rate. So 6% is gone. We're reevaluating and re-estimating where peak rates are in the UK. How tough is it out there? One man that can give us an insight into that. Saif Malik, CEO of Standard Chartered UK, head of client coverage there and in Europe. Saif, good to see you this morning. I paint a bleak picture. The house of cards on the pound and rates comes down. But how would you describe risk-taking and business sentiment from the customers you bank in the UK to the rest of the world?
Good morning, Manis, and thank you for that rousing introduction and then introducing me. Look, I think we have to, take a view that we saw some, difficult news that came out yesterday. But I think there is some positive shoots there that if you look at on a quarter growth, the UK economy did grow at 0.2%. And, that did show some good sentiment. And even though we saw, especially the services PMI drop yesterday, it has been above 50 for the past few months. So there has been some, positive outcome there. And if you look at it from the pre-COVID pandemic levels, so if you look at Q4 2019, the UK economy is up over 2% on that basis. So, I look at it from a perspective of, where do we see some growth areas and where do we focus on? And we've seen, a good outcome even from our business perspective. And if you compare it to what's happening in the Eurozone, the Eurozone is going through a similar outcome also. I think they've had, their services and manufacturer PMI also drop, and their growth on a quarter-on-quarter basis has been 0.3%. So, I think the UK is not that far down the lane there.
Just briefly, do we avoid recession? This is what we're trying to debate because it's pretty important to the Bank of England. Briefly, knock that away for me. Do we avoid recession in your view in the UK?
So I don't think we can avoid recession. I think, unfortunately, probably in the next 2 months, so we are projecting probably around the mid of Q4, so September or October, we will start seeing a recession kick in. We expect that to go into Q2 of next year, when we will see sort of the rate hikes probably come to an end. We are projecting 2 more rate hikes of 25 bips for September and November. I think the market has probably put in a third one where we're not sort of projecting that at the moment. And we do expect that this time next year, we will be going back into positive trends. So that's the way we look at it, just because I think you can see, the rate hikes are coming in and are having a lagging effect now. And this is the result of the PMI data that came out yesterday.
Are the hikes knocking your business? I know that you have NIMs. I know that you've got net interest margin. And that story is sort of 6 months ago. Are higher rates a threat to your business? Are they picking away at your business? Any drop-off in business as a result of rates?
So Standard Chartered Bank, in the UK, what many people may not know is that we have over 2,500 people that work for us here. We play a very critical role for the UK economy, bringing in investment from our clients in our networks, from Africa, Asia, and Middle East, bringing in investment in the UK, but also more importantly, working with some of the top FTSE corporations and institutional players and taking them also into our network, providing them with sort of our own product and solutions. And we've really been punching above our weight on that, especially in areas like sustainable finance. We have seen that trend continue for H1. I think we had a good positive growth. Even if you remove the NIM impact, the underlying growth is near double digits. So I think we're very comfortable with what we're seeing in terms of the growth of our large corporates who are now expanding out of the UK because they are seeing the shrinkage here, and they have the ability to put that investment into other markets that are growing very well. We talked about the Q1 versus Q2 growth rate of the UK and of the Eurozone, especially if you compare it to Q4, the pre-COVID levels. The UK has grown by sort of 2.5%. The EU zone has grown a bit higher, but the US economy has grown 6.5% between the Q4 pre-COVID levels to Q2. So the US economy is really doing well, and that's providing a good pivot in terms of what's happening globally.
Saif, obviously we debate what happens with Hong Kong and China every day here from the axis of the Middle East. Yeah. You're banking corporates there in Europe and the UK back into Asia. I mean, that is part of the big appeal of Standard Chartered, of why you're there. Are you cutting back? You're responsible now for the UK. Are you cutting back any credit, letters of credit, any leverage of your UK corporates into those Asian markets and into China? Are you concerned to the extent of where you would reduce some of your risk exposure?
No, actually, to be honest, Manus, we are actually in an expansionary phase here, both here in UK and in our continental Europe business. We feel that within the corporates that we deal with here, there is enough appetite to do that. It's not just in China. I mean, obviously, China provides a huge opportunity, but we are seeing other markets like India, the ASEAN markets, Singapore. They're all driving, really good growth, and they've all come back very strongly from the sort of the pre-COVID levels. So our corporates are going in all different markets there. The supply chain distribution is moving out, not just in China, but in other parts. So we are following that trend very carefully.
So you're the newly minted CEO for the UK and for Europe, which begs the question then, I know you don't have a retail presence in the United Kingdom, but would you consider returning? I mean, it's been decades, over a decade since you've had that. Would you consider a retail offering in size in the UK again?
Like I mentioned, Manus, we have an operation here. The model is working very well for us. The model is around how do we ensure that we take our corporate institutional clients. One is sell them, the product and services which we invested quite a bit already over the last few years for our capabilities both here in the UK and in Europe. And how do we take them into our network and then bring our network clients into these markets also. That model has worked very well for us. I don't think we're going to shift away too soon from that because, in terms of, the opportunities and where we see growth, even in the next 5 years, this model works pretty well for us.
Let's just square it away. You've got a virtual bank in Hong Kong and Singapore. Will you consider a virtual bank in the UK?
I think I would say nothing is off the table. We have set up our SC Ventures business, which is part of which is where Mox, the virtual banks sit in. We continue to look at different options and investment opportunities that come through. And if there's something that works, we'll always look at it. I don't think we'll take anything off the table.
OK, well, you can break that with me if it does come onto the table in size. Rishi Sunak is announcing that at Bletchley Park, the home of code breaking, don't worry, it's not a complete left turn, he's going to have an AI summit. So this is interesting. Bletchley Park, the home of code breaking, is now to host the World Summit on AI safety. I'm sure AI is on your table, but what I want to know from you politically, have you been inside number 10? What are you lobbying? What are you telling the government to do? Have they got their hands around Open Britain and FDI coming in? Is the government doing enough to help you build the SC business from the corporate point of view? Are we passing the nadir of Brexit and into the opportunity of the future?
I think so. I think if you see the amount of interactions we are having with, not just with number 10, but with many of the ministers, especially around the trade front, I think that there's a lot of intent to listen. I saw an interesting fact, Manus, that I think it was an Oxford Insights research that was done last year, which measured government readiness for AI adoption. And the UK came in third globally, right? So I think that's a big step, and that's a great platform for Rishi Sunak and the government of the day to build upon. Now, what's going to hold them back is that they have an investment for AI development, which is very key to how that rolls out, for only about £1 billion over the next 5 years. Obviously, that has to increase many folds, especially if you look at the US CHIPS Act and the Europe CHIPS Act. So I think Rishi Sunak and the government have to really focus on it. It is, and it can be a competitive edge and an advantage for the UK. And we are seeing really good traction on it. It's about how do you sustain it and how do you put policies that enable this industry to grow and really evolve, and as we see, develop very quickly. So we're tracking that. I think so far we see good messaging, and I think we're seeing good rhetoric come out. So we will continue to work with the government and see how we can help.
Briefly, I know Europe is the other part of your portfolio, and I don't want you to walk out of the building thinking the only thing I spoke to you about was the UK. How's the demand for credit? Don't worry. How's the demand for credit in Europe? Is there slippage? Is it weakening? How would you best describe it to the market?
Oh, I think I would say it's very strong. I think both the UK and Europe are all playing a very important role, especially around the sustainable finance space. If we look at the opportunities that we have in our networks on renewable financing, on transition financing, we have one number, which it could be anything, but there's one number just in our network of sort of Africa, Asia, Middle East. They need $95 trillion up to 2060 to get to any sort of net zero ambition. So, I think that space is huge. I think the Europeans are playing a big role on that front, on the energy renewable space front. But also, some of the largest corporates, be it on autos, healthcare, consumers, emanate from this neighborhood, right? And they are growing in their own markets, but they're also expanding globally. So we work very closely with them, and we do what we do best, is deliver our network to these names that we have great relationships with.
Saif, thank you so much for joining me this morning. Saif Malik, CEO of Standard Chartered UK, head of client coverage for Europe as well. His calls on the UK. Coming up on the show, companies struggle to convince their workers to return to the offices. Well, Pret A Manger is rethinking its city centre strategy. I catch up with the CEO, Pano Christou. That's next on Bloomberg.
What can sandwiches tell us about the UK's return to the office? More than you might think.
Pret A Manger is one of London's most popular lunchtime destinations. Since COVID, they've been feeling the squeeze in the city, which has not yet recovered. In August, transactions were 79% of pre-pandemic levels. Hybrid working means that people are staying at home for part of the week, mostly Mondays and Fridays.
That means places like this, with 3 Prets within a 3-minute walk, just aren't selling as many sandwiches and coffees as they were before, and it's forcing the chain to change its approach.
Business is booming at London airports, with transactions up 54% on pre-COVID levels in August. Pret is also eyeing expansion in Essex, Cambridgeshire and Yorkshire, as well as motorway service stations, with a drive-through option in the works.
Pret is also no stranger to inflation. Over the last 2 years, this tuna baguette has risen from $2.99 to $4.25 today. This leaves Pret more vulnerable to competition, including from supermarkets, with their own high-end sandwich offerings.
Bloomberg 7 Meetings reporting on Pret. And the CEO joins me now. It is Pano Christou joining us for an exclusive conversation. Pano, good to see you this morning. I am a loyal, avid customer and fan of all of your products, but I haven't seen a carbohydrate since 1995. Now, let's get into it. You're going to go head-to-head with Goldman Sachs, who want people back 5 days a week. You've got government and tech. Do you think we'll ever go back, Pano? Do you think you'll ever get back to pre-COVID levels in the city in terms of business? Good morning.
Good morning. My honest opinion is no. I think hybrid working is here to stay. I do think people are slowly moving back to the offices more so. But I think employers are trying to be much more flexible with their employees today. And I think from our perspective, as a business, we have to evolve based on customer needs. So that's what Pret has been aiming to do. And, with the launch of Club Pret, which was a coffee subscription back in 2020, that was the idea behind that.
We'll come to that loyalty in a moment, because I think that's very much to do with trying to make sure that you're going head to head and retaining that. But I want to know about the strategy going forward, because the ambition is to expand in the shires, expand in cities outside of London. But the question that goes through my mind is, are you going to close locations inside London to redeploy capital elsewhere?
So we have closed some stores in London over the last couple of years. I don't envisage that will be any more. I think we are growing. Actually, this year will be the first time we're open to more stores outside of the UK than inside of the UK. And yes, we are growing significantly faster outside of London than inside London. But I don't see us closing more stores. At the end of every year, we do look at our real estate portfolio as leases come up and take calls. But I think where we've got to now is a good sweet spot. And we now have more stores across the UK than we had before COVID.
Where's going to be your biggest growth area? You're very popular here in Dubai. Where's going to be the biggest international growth strategy point?
I'm really excited about our expansion in India. We've opened in India this year in Mumbai and Delhi. So we'll be opening our 4th location in Delhi this week. So I think India is a very exciting opportunity for us. But I think we've got lots of opportunities to grow across the world. I think the brand seems to travel well across geographies. We're in the Americas, across Europe and Asia now.
I got to say, it is comfortable. I was both here, London and New York in the space of a week, and picking up a similar product across the world is very appealing. Where are we with, we're trying to debate whether inflation is really running down, whether we are in a disinflation. I know you'll say to me, man, salmon's up 50%, my lecky is up 300%, and my tuna is up. But are you seeing any signs of disinflation, inflation significantly rolling off the top?
Well, I think we have started to see it ease. I think my bigger concern is mortgages, and as people come off fixed rate mortgages, that impact to their spending. So I think you'll see that play out over the next couple of years. So I think that's where I see inflation will be dropping. I think as people's mortgage payments increase, I think that may make it even more challenging for our consumers.
I mean, here's the thing. How are you going to deal with that? We've got the stats. Your tuna baguette's up 42%. A couple of other products are up 40-odd%. You'll say energy, salmon and pay are up. But do you think that you're going to have to meet and match that disinflation and the mortgage squeeze with cutting prices?
Well, I think, we always try to stay competitive. We look at what the competition's doing, and we're not going to price ourselves out of the market. We're going to ensure that we have the best value possible for our customers for the products that we sell. Our ingredients are very high quality. I think we have the highest quality sandwiches and baguettes on the market. We have no intention to reduce the quality of our ingredients, our portion sizes. If anything, every year we look to increase the quality of our ingredients. So I think we will watch the market very closely and look to see how we ensure that we have the greatest value for our customers, whether it's holding prices. It wouldn't be the first time we have dropped prices on products if things do kind of fall back. So I think we are just watching things week by week, month by month.
Let's push you on the prospect of an IPO. Goodness knows London needs one. They need something back from New York. Are you actively lobbying JAB? Are you in active conversation about the probability of an IPO? Is it on the slate?
No, listen, JAB are wonderful owners to Pret. They are long-term investors. They're not like your traditional private equity firm. They want to be part of Pret's growth for the next 10 to 20 years or so. So I think that's given us a real opportunity through COVID and beyond to take some big bets, to really make decisions that may not yield benefits today, but will yield benefits over future years. So We are, very thankful for the support they've given to us over that time, and we're very much focused as a Pret overall leadership team, myself as Pret CEO, just doing the right thing for our business, for our teams, and for our customers. So that's not something in my thoughts or minds.
That's disappointing now, but make sure you come back and tell me when you shift on that and when and when they shift on that. You can always feel, you can open your heart to us. That is Pano Christou, the CEO over at Pret A Manger, with the very latest on your average price of a baguette and the risk when you come off your fixed rate mortgage, the reality check for the consumer in the UK. Bloomberg Economics says the UK is heading for a recession. We'll ask our man from the Eco team just exactly how brutal it can be on Bloomberg. Dan Hansen is our senior UK economist. He joins me now. Dan, we've just had two CEOs, Standard Chartered and the Pret CEO, worried about the UK. Standard Chartered call a recession. How bad or how soft will this recession be that they see coming down the pike?
Yeah, it's a really good question, and morning, Manus. So I think, look, we had this very bad PMI data yesterday, and it's sort of signalling a contraction in the economy in the third quarter. We've been of the view for a while that the economy will enter a recession, essentially on the back of this massive tightening cycle the Bank of England's undertaken. We think it will occur a little bit later than the PMI suggests, so maybe not the third quarter, but possibly the fourth quarter. That's when it will start. And our broad view is that it will be relatively shallow, actually, relative to history. It's going to be a relatively shallow recession, peak to trough fall of about 1% of GDP.
Dan, thank you very much. Short and sweet and to the point. It was the CEOs what done you in. They robbed you of your time. We'll be back to you soon. Kriti Gupta is up next from New York. Tom McKenzie at London HQ. Right here on Bloomberg.